Okay, so it looks like numbers have stabilised coming in and joining us. Let's press on. So, as I say, welcome to our latest webinar this morning in the Hot Topic series. And this one's entitled Picking Up and Dusting Off, which is really quite apt as we get ready to go into the autumn now that the schools are back. For those of you that don't know me, I'm Robert Capper. I'm head of the commercial team at Harrison Clark Rickaby's, and I'm also a regular chair of our webinars. I'm chairing the webinar today and I'll guide you through the session. We're due to be finished by about 11:45, 12 o'clock. We'll certainly have you away in good time so you can press on with the rest of your day. We know you appreciate these things running on time. I'm joined today by a number of my fellow partners. I've got Alison Scott with me, who is a partner in the corporate team. She deals with local SMEs and helps them both buying and selling their businesses and also taking investment and finance. And then I'm also joined then by Sam Payne, who's head of our restructuring and insolvency team, and he helps clients as much avoid troubled water as get out of troubled water. So he will be talking to you about everything to do with insolvency, turnaround, refinancing, and directors' duties. And then last but not least, I'm also joined by Clare Day, who some of you will have heard before. She's a regular speaker on our webinars. Claire heads our finance and financial services sector and has a particular interest in real estate finance. And between the three of them, they're going to walk you through some of the current issues which they are seeing at the moment, and the issues which they think they'll be seeing as we come out of the summer and head into the autumn. There are a number of questions we've had before the session this morning, so I'll run through those with Alison, Claire and Sam, but if any of our guests this morning want to ask me questions, then I'll be keeping an eye on the Q&A panel and I can ask those questions. So Alison, let's start with you, and perhaps the obvious opening question is, how are you actually seeing the corporate market at the moment?
Thanks, Robert. Well, actually, at the moment, it's really been quite busy. We haven't really seen any particular downturn in the activity and the work streams that are coming through. What's quite interesting is the variety of work that we're seeing. It's not necessarily just traditional M&A. We're seeing a lot of work around, for example, options for employees, trying to retain key members of staff. We're also seeing lots of restructuring and people taking some tax advice and resulting in restructuring their group companies, putting in holding companies, asset protection, that kind of thing. Yeah, so we've still got a lot of activity in the general M&A sectors. And in particular, for example, what we're seeing is there's quite a lot of cash still sloshing around in healthcare. So particularly, for example, in adult services and child and young adult services, and the vets and the dental sectors continue to be strong.
Okay, what do you think is driving that buoyancy, Alison? Because we heard so much doom and gloom in 2020, and even beginning part of this year, it was very much doom and gloom. What's driving the activity?
Well, I think a lot of people have had an opportunity to sit back and take a bit of stock, and they've taken advice from their professionals. Particularly, that's where we're seeing the restructuring work and the tax-driven work that's coming through. But I think also that there are a lot of companies that have been quite resilient through the pandemic and have come out of it quite well. There's a lot of cash-rich companies, so they can be quite opportunistic with making acquisitions, disposing of bits of companies or groups that they're not particularly key focus for them. And I think although we're seeing that deals are perhaps there are a lot of them, what we're finding is that that there's a lot of due diligence going on, so deals might be taking a bit longer, and due diligence is probably a bit more intensive than it used to be. I think with M&A, it's always a balance of risk between what the buyer is willing to take and the warranties and the indemnities that they require. And I think what we're seeing is that there's people appreciate that there's probably people are doing more due diligence, they require more warranties and indemnities, and we've got a whole new things coming into our agreements now, COVID-19 warranties, CJRS warranties, but it does allow people, you know, if they've done things well through the pandemic, and they're, you know, basically a good company, there are always people that are keen to be acquiring.
Okay, thanks, Alison. So what would you say is the attributes of the businesses that have done well during the last 12-18 months, and what do you think will be the key attributes for them going forward over the next 12-18 months?
I think the key attribute was, I mean, prior to the pandemic, obviously there were a lot of companies that were already struggling, but I think having the cash resources to weather that storm was particularly key for businesses that have done well. The ones that were already struggling probably sort of continue to do so. But I think one of the main things that we've seen is adaptability and flexibility from clients that have, you know, just changed their whole business model, really, to be able to make the most of the pandemic, and I guess just, you know, learning a whole new way to work, going remote as for a lot of clients. A lot of clients weren't necessarily doing that, but I think it's that adaptability that that has allowed certain companies to flourish more through that pandemic. Okay,
interesting perspective there about adaptability and flexibility, and then lots of clients obviously looking at potential sales at the moment, let alone those who are already in the process. What would be your top tips for any of those clients that are looking at potential disposals in the next few months?
Well, I think it's quite an interesting time for people. There are always the businesses that will, or people always have potentially a succession issue when they're selling a business. The people that the vendors think, or the owners think that they might want to sell to, don't necessarily want to buy it. But I think what I think will be coming through is private equity is certainly quite prevalent and is expecting an awful lot of activity next year. And I think that for people that want to or are thinking about selling, I would say probably sit tight. There's a bit of stuff to still come out of the wash in terms of valuations, and for good companies, I think that there will be quite a lot of there's always a lot of potential suitors if you're a good company, so you don't need to jump at the first opportunity that comes your way. And we have seen that a bit recently with people receiving an offer. They think that they're desperate to sell because they've had a difficult 18 months, whatever the case may be. But actually, if they're a good business, and particularly, for example, technology businesses at the moment seem to be really quite of interest. And I think that there will be, if you can sort of weather the next 6 to 12 months, perhaps, that there will be some really good opportunities for sellers. And I would say, I mean, what we always say to people who are thinking about selling their business is, if you are thinking about selling, then use your time wisely now and get your affairs in order. There's an awful lot of process and time involved in selling a business, and if you've got some time on your side and you know that that's what your ultimate plan is within a year, 18 months, whatever it may be, you can really look to get your affairs in order, get your paperwork all tidied up, because due diligence is a stressful time for any seller. It's like a whole nother full-time job. So the more that you can do to prepare and get yourself ready, the better.
Okay. And I think, Alison, one final question for you. What businesses have done particularly well, do you think, during the last 12-18 months, and will go on to do particularly well over the coming 12-18 months?
Well, I think personally, I mean, I can think of a couple of examples. I've got one client who was in the home delivery sector for garden plants, done phenomenally well, doubled their turnover in a year. So, and went from having a sort of a 10% share of the market to almost having a 80% share of the market when all of the garden centres were closed. They've done phenomenally well in terms of turnover and just the, their bottom line, but have had various issues along the way. They have a lot of European staff, so they had to get people in to help packing and distributing and unloading plants and all the rest of the issues that go around it. So they've been a sort of particular winner. And on the other end of the spectrum, probably touching a little bit on what Sam will talk about, are companies that were, I can think of another example where they were really struggling, but actually the availability and the COVID loans and the bounce back loans and the furlough money have actually managed to keep the company alive. Undoubtedly, if COVID hadn't have hit when it did, that particular company that I'm thinking of would have had probably multiple winding up orders served against it within a very short period of time. So actually COVID has done that business a favour, and it should hopefully continue to flourish. The COVID period gave it the chance to renegotiate employment contracts with highly paid individuals, and they're sort of in a better place now for it.
That's a really interesting thought there, Alison, about a business that's not only survived the pandemic, but actually survived because of the pandemic. Yeah. That's really interesting. Alison, thank you for that. It's really some really interesting comments there. If you can stay on with us, I'm sure we'll come back to you later on. So Sam, Alison's given us a really positive view of the last 12, 18 months and positive view of the next 12, 18 months. What are your predictions as an insolvency and restructuring specialist?
Thanks, Robert. I think the simple answer to that is more stress situations and more insolvency work. But probably in order to properly frame that answer, it's worth considering what we've seen in the last 18 months. And because of all the things that Alison was referring to there, the CBIL loans, the bounce back loans, the moratorium on winding up petitions, and moratorium on business tenancy forfeiture, and so on and so forth. Their last 2020 had the lowest number of insolvencies for over 20 years. Wow. So that sort of flies in the face of everyone that I speak to and tell them what my line of business is, and the immediate response tends to be, "Oh, you must be busy." And we're not sat on our hands, but we haven't had the sort of the flood of work that people expected at the start of the first lockdown. Which is good. And then even in July that's just passed, if you compare the figures to 2019, then just about every measure is about 80% down. So that's in terms of the number of CVAs, the number of administrations, the number of compulsory liquidations. So you're looking at a very, very low starting point. But I suspect that veneer of comfort is going to wane away in the coming months. You'll see the end of furlough at the end of September. Unless the government decides to extend the moratorium further, people will be able to issue winding up petitions again. And I think there's a lot of pent-up demand and a desire to not go back to that sort of that scene that we had in after 2008, when there was this just raft of zombie companies, and that those are existing again because at the moment there's just no pressure on them to go into a process. So they're making the most of the CBILs, the bounce back, but now they've got to pay back the CBIL loans, and I think there's going to be quite a lot of activity. And then again after March next year, when the moratorium on business tenancy forfeiture expires, then I think there'll be more activity then again. But that is providing that the government don't take any more steps to extend these. And I think one option that we've heard talk of in terms of the winding up petitions is that they're not going to extend the deadline again, so that's the end of September, but what they might do is just change the threshold for petition sums. So at the moment you can petition for any debt that's due that's over £750, and they might change that to £20,000, which will limit the number of incoming cases.
Thanks, Sam. That's a really stark fact, isn't it, that insolvencies were so far down last year. That really flies in the face of what everybody would expect. But you can imagine in that releasing something then 2021, 2022 with more insolvencies coming. What type of businesses do you think will be at particular risk going forward?
Well, I think if you look at the last year, what was hitting the headlines was all the casual dining and retail, and we were involved in things like Debenhams and Bon Marché and things like that, which is all very interesting. But I suppose the standout piece is that problems and the risk of solvency isn't peculiar to one sector. And if I just look at this sort of a snapshot of the cases that we've got at the moment, we've got a care group that are in dire straits at the moment. And at the moment, I think occupancy in the care space is down 10%. So there are problems there. We've got a coal mine, which is something that we didn't expect to see. We've got various independent schools. We've got across the West Midlands, we've got large and small manufacturing businesses and suppliers into the auto sector. We've got software businesses and lots, and there always is lots in the construction space. But again, we're seeing that now. And there's lots of different reasons for that, whether it's just a lack of staff. A lot of staff, certainly in hospitality, they just went back to Eastern Europe, where they're originally from. There's supply bottlenecks in the manufacturing space, which is causing issues, and there's also record stock shortages. So all of those add up to problems across multiple sectors. So we're not expecting one area alone to be busy, but in some cases we can't see when the start is going to be. It may be end of September, but I think sort of we're predicting more it will be in 2022 and probably Q1 or Q2 then.
Interesting. I think everybody watching this webinar will realise that the stock shortages are there, even if they just go into the local shop, but it's quite noticeable. And that lack of stocks to have an impact, isn't it? What approach are lenders taking at the moment, Sam? How are they reacting to the current circumstances? So
we act for a variety of lenders in different spaces, and if I use a comparison with 2008 again, most of the work we did was with the clearing banks, so the high street lenders that everyone will be familiar with the names. And now you're seeing a lot more challenger banks, a lot more sort of new arrivals into the market, and they've all got their own different approaches to how they deal with this sort of situation. In the main, I think lenders have been supportive. And again, in the main, a lot of them have changed their profile completely. So a lot of the smaller challenger banks that we act for, through C-bills and the last 18 months have radically changed the profile of their book. So they've now gone from a good example of a client that had 150 million out the door at the beginning of the pandemic, and by 2 months ago it was over £500 million. So that's a massive sea change in their profile. And they've also got a really good and sensible support team that will be able to work with customers that are in difficulty. So I'd expect them to have a very supportive and pragmatic approach. There are other challenger banks that have got massive support teams. Again, a lot of people that you used to see at RBS, GRG teams, and they'll know exactly what they're doing. And equally, there'll be some banks and lenders that don't have a terribly sophisticated support team. And it'll be interesting to see how they approach stressed issues going forward.
Okay, thanks, Sam. That's some really interesting insights there into the world of insolvency and recovery. So thank you for that. If you can hold on with us as well with Alison, I'm sure when we get to the end, there'll be some further questions for you and Alison to pick up on. So Claire, we've heard about the approach that lenders are taking around their funding. What security are the banks looking for? How are you seeing that as a property lawyer?
So thanks, Robert. I think it's fair to say that at the start of the pandemic, the banks pretty much shut up shop. I think there was a real nervousness in the property industry. People didn't know what was going to happen. It was uncharted territory. And what we found were a lot of our contacts in the banking industry were being moved into those support roles that Sam was just talking about. Once the property industry reopened from June last year onwards, and there was a clear consumer demand for property, transactions rose considerably, and the banks then started to have much more of an appetite for lending again. As Sam said, a lot of new banking propositions have come into the market by way of challenger banks. Loan to values have continued to reduce throughout the pandemic, and rates have become quite low. So on the face of it, there's never been a better time to lend, but clearly banks are still going to be taking a cautious approach given what's happened in the past. And certainly, banks are going to be much more willing to lend where there is security to secure against. So businesses with property are obviously going to find securing finance a lot easier. It goes also back to what Alison was saying about the due diligence process. And one of the things we've found with real estate finance transactions is that deals are starting to take a bit longer because that due diligence is taking longer, and banks are wanting to make sure that they have dotted all the I's and crossed all the T's. So again, it goes back to what Alison was saying about making sure that where SMEs are looking to secure finance, that they've got their house in order, making sure that any statutory compliance has been dealt with, things like asbestos surveys, having up-to-date EPC registers, for example, and just getting your house in order so that it makes that process a lot more straightforward, and gives you access to the funding a lot quicker.
Okay, thanks, Claire. Sam touched on earlier some of the things that landlords can and can't do. In fact, lots of things that landlords can't do. And there was various changes to the rules brought about last year. Where are we at now with all of those things? What can landlords do, and how can tenants react to the things that landlords can do?
It's been really interesting because we act for a variety of both landlords and tenants. So we've seen it from both sides of the fence. And when you're talking to landlord clients, they are quite disgruntled about the fact that these tenants have been given a whole raft of support from the government, waiver of business rates, access to grants. And yet landlords have had their hands very much tied behind their backs. One of my landlord clients, who has various leases with a national car park operator, was basically told that they weren't going to be paying any more rent. And the landlord client knew full well that they absolutely had the means to do that, but they were simply taking advantage of the fact that they knew the landlord was not going to be able to take any action. So I think there have been instances of abusing the process, certainly, and we've heard other stories similar to that. But what's been really interesting is where there's been a dialogue between landlords and tenants. So the more successful scenarios have been where landlords and tenants have actually come together to try and work out a solution that benefits both parties. So we've seen a real influx of instructions whereby tenants wanting some sort of rent relief, rent concession or rent reduction have been able to offer something to their landlords in return, whether that be taking out a break option and giving the landlord certainty that they're not going to be taking back an empty premises on a certain date, or whether it be the tenant offering to extend their lease and therefore potentially enhancing the landlord's freehold reversionary value. So those have been the more successful scenarios, and certainly that bodes far better for relationships going forward.
Thanks, Claire. You touched there briefly on values. The property market, by any definition, has been booming. I know everybody's an armchair pundit on the state of the property market. What are your own thoughts for the rest of this year into 2022 for the state of the market?
Yeah, well, it's no secret that the property industry has been creaking at the seams, and you've only got to have looked on LinkedIn over the last few months and seen all the stories of burnt out conveyances and people just wondering what on earth's going on. I think a lot of that's been the government relaxation of the stamp duty and the reduction of the stamp duty rates, which the first tranche came to an end at the end of June. So certainly transaction volumes have started to level out since the end of June. Seems to be a little bit more normality in that regard. But looking at the values, they seem to be holding for now. I think what will be really interesting is looking at the rental market. Sam mentioned obviously the furlough scheme being wound up shortly. People potentially will have an issue with job security, and maybe mortgages are not going to be readily available. So it'll be interesting to see whether the rental market will pick up as a result of that. Again, looking at how we use offices as well, that there's been so much commentary about the flexible working and what's going to happen to the office space. And I think, going forward, people are starting to look at whether they can make office space more flexible, work better for companies. We've heard stories of some of our clients whereby they're looking to reduce space but use it so it's more beneficial to them and their employees. So I think we'll see a lot of that coming forward. Alison mentioned in response to one of her questions about COVID clauses coming into corporate and commercial transactions, and we've seen similar in leases. So We've got several leases on the go currently where tenants are very nervous because of having been affected by the COVID closures. And what they're doing is they're introducing clauses into their leases to make sure that if there is another lockdown, that they are protected, whether that be some form of reduction in rent or even a full waiver. And that's just simply down to negotiations between landlords and tenants. And then I think banks' appetites for lending, I think that will continue, albeit banks are starting to look more carefully at the sectors that they're investing in. So we've got several lenders who are looking a bit more carefully in terms of hospitality and leisure industry, which has obviously been hit very hard, and potentially retail as well. But there are other industries, care homes, for example, where we've seen a real pickup in instructions on the real estate finance front.
Interesting. You commenting on care homes. It'll be interesting to see how the care home market's impacted by the government's announcements this week. But it'll be interesting to see how the property market itself is impacted after the government's announcements, and whether taking that tax out the market will impact on pricing. Thanks, Claire. Really interesting overview there on a whole range of property issues. I think now I'm going to take the opportunity to widen out the discussion back to the whole panel. And a question I like to ask panelists when I'm sharing is their top tips. And I think really I'd put that question to each of the panelists, and perhaps we'll go in reverse order. Claire, what would be your top tip for a client as they go into the autumn and look forward towards 2022?
I think it just pays to be organised. So if you are looking to secure funding, find out what your funders' requirements are. There are so many funders out there, and they all have completely different requirements in terms of what they need to sign off against a loan advance. So it does pay to get organised and to get your advisors on board at an early stage as well, to make sure that they are able to support you through that process. And also, whether you are a bank, a borrower, a landlord or a tenant, just keep the dialogue going. I think the worst scenarios have been the ones where there's just simply silence and people don't know what's going on the other side. So I think certainly sort of keep communication channels open and keep talking.
I think that's often. I think you've given us tremendous value for money there, Claire. I asked for one top tip and you gave us two. So that's great. So no, I think you're right. Preparation, and also comms. Keep those comms moving. That's absolutely key. And I'm going to put you on the spot and say one question for you. We won't be taking note, we promise, but it might be a recorded webinar. Property market up, down, or stable by this time next year?
Ooh, I think there will possibly be a slight dip towards the end of the year, simply because we've got the stamp duty rates being reinstated from 1st of October onwards. But given that there is such a demand for property at the moment, I think it will be short-lived. So I still think property is a very safe bet for an investment.
Thank you, Claire. That's great. Sam, to you, what would be your top tip for clients as they're looking ahead to the autumn?
Similar to Claire in many ways. It's all, if there's any early signs of any stress whatsoever, it's that early engagement with advisors and then with key stakeholders, and not to this. One of the things that we see relatively frequently is directors burying their heads in the sand and not recognising that there's an issue. The longer the directors wait, the bigger the issues will become, and the earlier that the advisors are on board, the more frequent a solution will be found. So it's that early engagement is absolutely critical. And then also just strength testing relationships across the board, really making sure. You might feel that your business is in a really good place, but how does your supply chain looking? Are you making sure that your key suppliers are being vetted? If one of those goes into a process, how will you survive? Is there a plan B? And that's a relatively simple step to take, and it's one that all businesses should be looking into.
Thanks, Sam. I think you actually raised Claire there. I think Claire gave us two tips, but I think you actually gave us three. So I like that. So we had get in there early, look at it early, take advice, get advice from professionals to help you, and stress test. I think that stress testing point, as a commercial lawyer, is really important, I think. So Alison, over to you if you're either your top tip or top four tips.
Well, I'm going to just jump on the back of Claire and Sam and say all of the above, but then I'll raise them an additional one, which I think is just to take your time, I think would be the other thing to say. I agree with Claire in terms of, the getting your house in order. Just don't rush into things, I think, particularly on the sales side. I think there's going to be lots of activity, lots of opportunities. And, if you can just take your time and think about things. One of the things we have seen is quite a lot of deals that are coming through the pipeline that really aren't buyer deals. They're the vendor funding their own exit. I think they will continue. But I think if you take a step back, look at the deal as a whole, and think about what it is that you're trying to achieve, and just take your time.
I think, Alison, that tip there from you actually is a really sound tip. And I have a client who I've acted for many, many years whose favourite adage is always "don't panic." There's always an answer. May not be apparent to start with. Keep working it through. And I think actually, if you work back then through Sam's advice about taking advice, stress testing, something will come out of that in way of a solution. And Claire's comments as well about preparation and comms is really important too. So hopefully lots there for clients to think about. So that brings us to an end for the webinar this morning. My thanks to Alison, Sam and Claire. Some really interesting comments and also tips and advice there for everybody who's listening this morning. What I would say is if there's any questions that people have got, please don't hesitate to get in touch with any of our panelists this morning. I'm sure they'd be more than happy to follow up. You'll find their contact details at www.hcrlaw.com. And I suspect, as usual, we will be sending a recording of this webinar on to everybody who has been online this morning and watching it, so you've got it for future reference. But on that note, thank you very much, everybody, and we can all go about our day. Thank you.